Economic collapse doesn't usually look like collapse at the beginning. There's no sudden warning, no clear signal that everything is about to fall apart. In fact, most of the time, it looks like the opposite. It looks like success. Growth is strong, money is flowing, opportunities are everywhere. From the outside, everything appears stable, even unstoppable. And that's exactly what makes it dangerous. Because when an economy is growing quickly, people stop questioning it. They stop looking for weaknesses. They assume the system is working, because it is. But underneath that growth, something else can begin to form. Not a crash, a dependency. Every economy needs something to drive it. Industry, trade, resources, innovation. But when one part of the system becomes too dominant, everything else starts to revolve around it. Slowly at first, then completely. Investment flows in one direction. Infrastructure builds around it. Jobs depend on it. Government revenue begins to rely on it. And over time, the entire system becomes tied to a single source of growth. At that point, it doesn't feel risky. It feels efficient. Why diversify when one thing is working so well? Why spread resources when one sector is driving everything forward? So the system leans further into it. More capital, more expansion, more confidence. And the stronger it looks, the harder it becomes to step back. Because now, changing direction isn't just difficult, it's dangerous. This is the stage where most economies make the same mistake. They confuse momentum with stability. Growth continues, but flexibility disappears. Options narrow, risk concentrates, and the system becomes less capable of adapting to change. But none of this is obvious in the moment. From the outside, everything still looks like success. This is exactly what happened during the guano trade collapse. In the 19th century, Peru discovered something incredibly valuable. Not gold, not oil, guano. A natural fertilizer, highly sought after across Europe and the United States. It transformed agriculture, increased crop yields, and became one of the most important commodities in the world at the time. Demand exploded, and Peru controlled the supply. Almost overnight, the country became incredibly wealthy. Exports surged, government revenue increased. The economy expanded rapidly. From the outside, it looked like a perfect system. And in many ways, it was. For a time. Because with that wealth came confidence, and with confidence came decisions that would shape everything that followed. Instead of diversifying, the economy leaned further into its advantage. More focus on guano, more dependence on exports, more assumption that this source of wealth would continue indefinitely. And as the money flowed in, the government began to act on that assumption. Spending increased. Large infrastructure projects were funded. Ambitious plans were put in place. But there was one problem. The system wasn't being built on something stable. It was being built on something temporary. Because no matter how valuable a resource is, it doesn't last forever. At first, that didn't matter. Production remained high. Demand stayed strong. Revenue continued to flow. But underneath that stability, the foundation was becoming more fragile. Because the more the economy depended on one thing, the more exposed it became to any change in that thing. And that's where the real risk begins. Not when things are failing, but when everything depends on them not failing. Because at that point, the system doesn't have a backup. It doesn't have flexibility. It doesn't have time to adjust. It just keeps moving forward, assuming the conditions that created its success will always remain the same. And that assumption is where collapse begins.
The collapse doesn't begin when the economy fails. It begins when the foundation starts to change. At first, nothing looks different. Production continues. Exports remain strong. Money is still flowing into the system. From the outside, everything appears stable. But underneath, the conditions that made that stability possible are starting to weaken. In Peru's case, the entire system depended on one thing continuing exactly as it had before: constant demand, reliable supply, high prices. And for a while, those conditions held, but not forever. Because the problem with relying on a single source of wealth is that you don't control it completely. You can manage it, you can expand it, you can depend on it, but you can't guarantee it. Over time, supply began to decline. Not suddenly, not dramatically, just enough to matter. At the same time, competition started to emerge. Other sources, alternatives, new ways of producing fertilizer that didn't rely entirely on guano. Individually, these changes didn't seem catastrophic, but together, they began to shift the balance. Prices softened, demand became less predictable, and the flow of revenue that the entire economy depended on started to slow. This is where the real pressure begins, because when an economy is built on one source, even a small disruption has a much larger impact. Government revenue started to tighten. Projects that had been funded during the boom became harder to sustain. Spending commitments remained, but the income behind them was no longer guaranteed. And this is where the system becomes trapped, because reducing spending suddenly would expose the weakness. But continuing to spend requires money that isn't coming in the same way anymore. So instead of adjusting, the system stretches. More borrowing, more pressure, more reliance on the assumption that things will return to normal. But they don't. And the longer the system delays adjusting, the more fragile it becomes. This is the stage where collapse becomes inevitable. Not visible yet, but locked in. Because now, the economy isn't just dealing with a slowdown, it's dealing with a mismatch. Spending based on past success, revenue based on present reality. And those two things no longer align. During the guano trade collapse, this gap continued to widen. The government had built its financial structure on the expectation of continued growth. Loans were taken, projects were expanded, and commitments were made under the assumption that the flow of wealth would remain constant. But as that flow weakened, the system had no way to correct itself quickly. Debt increased, confidence began to slip, and the economy entered a phase where it could no longer rely on the thing that had built it. This is where most people expect collapse to happen. But it doesn't. Not yet. Because systems don't break the moment they become unstable. They continue, often longer than expected. And that's what makes this stage so deceptive. From the outside, it still looks like the system is functioning. But inside, it's under pressure from every direction. Revenue is falling, obligations remain, confidence is weakening, and the system is forced to keep moving forward, even though the conditions that supported it are disappearing. This is the tipping point. Because once an economy loses the ability to adjust, it loses control over what happens next. And from that point on, collapse isn't a possibility. It's a matter of time. By the time the collapse becomes visible, the outcome is already locked in. Not because the system failed suddenly, but because it lost the ability to adapt long before anyone realized. What makes this pattern so dangerous isn't just the reliance on one thing, it's what that reliance removes. Flexibility. Because when an economy is built around a single source of growth, everything else begins to shrink. Other industries receive less investment. Alternatives are ignored. Risk isn't spread, it's concentrated. And as long as that one source continues to work, the system appears strong. But in reality, it's becoming more fragile over time. That's the illusion. Strength on the surface, weakness underneath. During the guano trade collapse, this is exactly what unfolded. For years, the economy expanded on the back of one resource. Wealth increased, confidence grew, and the system reinforced itself around that success. But once the conditions began to change, there was no alternative structure to support it. No secondary engine of growth, no diversified base, no buffer against decline. And that's why the collapse, when it finally came, wasn't controlled. It was structural. Because the system didn't just lose revenue, it lost its foundation. Debt could no longer be sustained. Spending could no longer be justified. Confidence, once broken, could not be restored. And when confidence collapses in an economy like this, it doesn't come back easily. Because people don't just lose money, they lose belief in the system itself. This is why these collapses spread so quickly once they begin. Not because the initial problem is massive, but because everything depends on it. When that single point fails, every part of the system connected to it has to adjust at the same time. And those adjustments don't stabilize the system, they overwhelm it. Spending cuts ripple through the economy. Unemployment rises, investment disappears. And what once looked like a strong, growing system begins to contract from every direction. This is the real reason economies collapse so suddenly. Not because of one bad decision, not because of one external shock, but because the system becomes too dependent on something that cannot last. And when that dependency is exposed, there is no gradual correction, only a rapid shift from growth to decline. That's the pattern. It starts with success, then dependence, then pressure, then collapse. And it repeats. Different countries, different industries, different time periods, same structure, same outcome. Because as long as systems are built around a single source of strength, they will always carry the same weakness. And most of the time, no one sees it clearly until it's already too late. That's what makes it so powerful and so easy to repeat. This is what empire economics is about, breaking down the hidden structures behind growth, collapse, and power. Not just what happens, but why these patterns keep showing up again and again. If you want to understand how these same dynamics are shaping economies today, make sure you're here for the next one. Because the next collapse won't look obvious either. And by the time it does, it's already underway.